How much are banks on the hook over motor financing? On the 1st of August 2025, the UK's Supreme Court delivered its ruling on the long-running motor finance battle over whether or not car dealers, when acting as credit brokers, have a legal obligation to act in the best interest of their customer.
For the reasons set out in detail in a judgement published today, the Supreme Court allows the appeals brought by the finance companies. However, we uphold Mr. Johnson's claim that the relationship between him and the finance company was unfair, and we allow the appeal in his case only because the Court of Appeal made a number of mistakes in reaching its decision.
Some had estimated that the lenders could be liable for billions of pounds in compensation claims, with estimates hitting 44 billion, just shy of the 50 billion spent on the PPI scandal. But estimates of the cost now sit between 9 billion and 18 billion. The banks with the biggest exposure to claims are Lloyds Bank, which has set aside 1.2 billion for the claims, as well as Close Brothers, which has set aside 165 million. Investec, Paragon and Santander UK are also impacted. The Supreme Court ruled in favour of the banks, narrowing the scope of any compensation scheme. But it upheld part of one complaint, which has resulted in the regulator planning to introduce a compensation scheme for those affected. There is confusion over how banks should assess whether clients need compensation, and anger that the regulator has said they should look at claims backdating to 2007, for which some say there is little information. While the judgment was mainly a win for UK banks, there is still concern about the wider impact of the redress scheme, which looks to be one of the biggest the UK has ever seen. Subscribe to The Banker to follow the fallout of the Supreme Court's ruling.